Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back. This is the weekend review of the trades that we made on Friday last week, May the 2nd. So as we head into this week, last week trading was a little bit slow. On Friday we had a lot of orders again, and Thursday didn't get anything filled. Friday got a couple filled, one opening, one closing trade, and we'll definitely get over those. But what I want to tell you guys is just give you a little bit of insight on what I've been doing this weekend. And it really has nothing to do directly with trading, but I always feel like it's good just to show you guys and tell you guys, maybe if you care or not, whatever the case is, what I do with my money besides trading. So I think it's important because I talk to a lot of coaching students that I've worked with over the past 7 years, and trading for me has been a means to do other things, right? I mean, there's trading money and you can always, keep funding your trading account, which is great. But for me, what I like to do is I like to take that money that I make in the trading fund at the end of the year, and I take some of that money out of there, and me and my wife, and we go and we buy an investment property. So we'll buy an investment property, we'll fix it up, we'll rent it, whatever the case is. And I think you have to have something in your bag of tricks, really, to do with your money besides trading, right? Because at the end of the day, I'm trying to build a portfolio of both on, a true portfolio of trading, but also a portfolio of properties. And that's just what me and my wife are doing, so that we can not have to trade every single day, right? Every single month. So if there was a time where we wanted to go somewhere or do something and I needed to take 6 months off from trading, I want to have some sort of other income coming in. And it's this whole idea of just diversifying, not only with your trades and options trading, etc., but just with your whole portfolio of assets in general. And whether that's rental properties or whatever you want to get into, antiques or houses or whatever the case is, you got to have something else. So this is what we did this weekend. This is why I'm sending out this video on Sunday evening, because we just got back from doing a bunch of work. And you can see my wife is in here in the picture, but this is actually a property that we've been working on and kind of put the floors down on this place just this weekend. But it was a HUD home, so there's actually a government foreclosure right in our area, and you can see just how bad it was when we came into it. I mean, they'd already taken up the carpets and everything, so we just had to pretty much go through and kind of gut the rest of it, and you can just see how much work really needed to be done. But at the end of the day, this is kind of the finished product that we were working on this weekend, so I'm really proud of the work that we did, and we laid everything ourselves, so it's really coming together very nicely. And at the end of the day, it's going to be a beautiful property, and it's going to be a great rental source for us going forward in the future. So again, I don't know if you guys care about seeing this stuff, but I always feel open and honest about telling you guys what we're doing with our money besides trading, because we are taking some money out of the trading fund each and every year, and we're starting to develop this portfolio of rental properties that we've been accumulating now as a means to an end later on in life, right? Helping build that diversified asset base. All right, so let's get back into what you guys really want to see, and that's the trades, right? Well, we only had one opening and one closing trade on Friday, but I want to go over the opening trade first, and that's in Pfizer. So if we take a look at the trade in Pfizer, it was actually a fairly large position. We sold 7 contracts in Pfizer for the June 30-29 credit put spread. So we sold the 30s, bought the 29s to help finance that sale, and at the end of that transaction on both sides, we actually took in a credit of about 35 cents. So this is actually a little bit better credit than what we usually like to take in, and that's because implied volatility is so rich in Pfizer right now, with earnings coming up on Monday. So let's go to the chart and we'll take a look at where Pfizer is now, and then we'll take a look at the trade tab. So you can see Pfizer kind of popped up here last week and has since kind of really given up most of those gains as it kind of heads in towards earnings. Now we do have earnings bright and early on Monday. I believe they announced earnings before the open. And there's a lot of talk about Pfizer right now. They're in the middle of doing some merger and acquisition deals. But what all remains true is that implied volatility is still very high, and this is going to be pretty much an earnings play. Now, the reason that we didn't do an iron condor or a strangler or straddle is because we actually need some positive delta in our portfolio. So we really just felt like, this is a good play. We're going to play the upside move in Pfizer here, see if they can't at least make a big move up higher right on earnings on Monday. So we sold the 30, which basically puts our line in the sand around 30 or so. Our break evens moved down much lower than that. But you can see that's really where we don't want Pfizer to go or open up on Monday. So that's really where our position is right now. If we go to the trade tab, you can see right now that our position down below is up about $3. But if we actually look at the trade grid where the position is, it's right on the doorstep of being in the money. And that's because Pfizer has very small strikes. They're only $1 wide, and the stock doesn't trade that fast. So it actually trades a couple cents a day. Yesterday, on Friday, it was down about 40 cents, which was actually a fairly big move, about 1.5% move in Pfizer. But you can see our first strike is at 30. Our next strike is at 29. Technically, our probability of being in the money is about 41, but we took in a 35-cent credit. So we're somewhere in the range of 35 to 37% probability of being in the money, which means that we're, again, somewhere in the range around 65 to 70% probability of success, which really is where we kind of want to be. We want to take in a nice credit for earnings in case we have to adjust the trade or if Pfizer goes against us. We'll kind of come back to you guys, obviously, in another video and talk about what we do to adjust the trade going forward. But all things are that we hope that Pfizer has a really good day on Monday and pops higher, implied volatility drops, and the premiums dry up. The closing trades, we closed out XRT. We had a put spread in XRT that we also had sold originally. So we had originally sold the 78.76, about a $2 wide put spread in XRT. Close that back out today for a 16-cent debit. This is actually one of those orders, if you've been following along with every video the last week or so, where I've been talking about the fact that we had a lot of orders that are just working, just nothing getting filled. And we've actually had this order working at 16 cents here for a long time, and it's been trading right around that neighborhood and just took a little while to get everything filled. We tried everything from reducing our contracts and just kind of legging out one by one to doing 2 lots, etc., and just nothing seemed to be working. So no real market until Friday. But we did close this thing out at a 16-cent debit, which means we made $24 on each spread. So it was a nice $100 profit on XRT. Really, at the end of the day, the story with XRT was that the stock continued to move higher, or the ETF continued to move higher, which was great, and implied volatility dropped. So when we sold this, I think implied volatility was above the 50th percentile, so that really helped, seeing the IV drop. But also the stock just continued to rally. So very slowly, but each and every day it rallied. And you'll notice that we sold it kind of in the early morning as soon as the stock kind of rallied up high at the end of the day. It kind of rallied towards 85 and then crashed back down. So gave us a really good opportunity to take profits. And the name of the game is that the stock did exactly what we thought it was going to do. Implied volatility dropped, so you have to take money off the table, right? Don't be risky in trying to get another 16 cents between now and June. We've got to go through all of May expiration and then through all of June expiration to get another 16 cents. It's just not worth the risk of holding the position going forward. So again, hopefully these videos are really helpful. I know there's only 2 trades now, but we'll get right back into it on Monday, start adding a lot of positions for June. Hopefully we can get some fills in the market here. As always, if you guys enjoy these videos, if you have any comments or questions, please add them right below to the video section or to the comment section right below this video. I'll get back to all of those either tonight or tomorrow before the open, and happy trading.